So our Applied Mortgage Academy monthly webinars, we have our first time home buyer webinars, our repeat home buyer, and then we do another webinar that's for real estate professionals. So today is for our repeat home owners. So hopefully you're in the right spot. We are going to be going over quite a lot of information, really touching the high points of a lot of questions we get right now, especially in this market. So we'll talk about the state of the market. We'll talk about kind of what's on people's minds often, right? Is we need more space, we need a different house, we need something new. Do we stay or do we go, right? So we'll talk about buying and selling. We'll talk about renovating and construction. Maybe you are in the right house, but you need more space and you don't want to move to another one. We'll talk about tapping into your equity in your home. Maybe you want to keep your current house and buy a new house. You want to keep your current house as a rental. Or maybe you want to live in your current house and you want to actually own another property, an investment property or a second home, right? And we'll probably sprinkle in some other little tidbits along the way. So hang in here with me. Again, any questions you have, you can stick them in the Q&A. You can also call or email or set up an appointment with us after the fact to really dive into your own specific information. This will be pretty high level so that you can just get a taste of everything that could be possible. So state of the market. At the beginning of this year, there's always these kind of marketing flashy headlines, right, that come out from various resources. And one of the phrases I kept hearing was, this is going to be the year of the fives. People were saying that for three reasons. A lot of economists are predicting that mortgage rates may drop into the fives again. They're also predicting that we'll have a little bit more inventory on the market. So 2022, 2023 were extremely low inventory. There were not a lot of homes for sale, only 4 million in 2023. That's predicted to go up to 5 million. So maybe a little bit, hopefully a little bit more options for people out there. And then economists are still predicting that there's going to be 5% appreciation of home values. So a lot of people are like, is the market crashing? What's going on? What's happening? The amount of demand, there's too many people and too few houses right now. So looking at simple economics, supply and demand is just not indicating any type of slowdown or depreciation at this point. As far as rates go, I like to throw this chart up here. This goes all the way back to 1980. So you can see that mortgage rates, we kind of got used to the last decade rates being under 5%, but really the average is more like within that 5 to 10% range, right? So we've sort of just returned to these 6, 7, the highest they went up to recently was over 8%, coming back down, like mid sixes to mid sevens seems to be this little fluctuation that's been happening over the last 6 months. It would be great if rates do drop into the fives. I don't know if or when that's going to happen. Nobody has a crystal ball, but you can see at least what's been going on recently. If you own a home right now too, and you have a higher interest rate because you just bought it in the last couple of years, keep your eye on things because it may be an opportunity this year to refinance. And again, experts are saying that home prices will continue to hold and continue to appreciate. So this is an estimated home price forecast that came out recently at the end of 2023. And, we're still seeing economists predicting home prices performing really well, at least in the foreseeable future. So everybody, so many conversations I have with people who own their home right now, they're feeling some need for change. They need to upsize, downsize, whatever, move to a new location. But maybe you bought or you refinanced when rates were in that super low 3% or even 2% range. And it's tough. It's like, do you move to a new house where you're going to be at a higher interest rate, maybe a higher payment? Now, your current house probably has a lot of equity in it, right? So that's where a lot of the good news comes into play. So again, we're going to review buying and selling. Do you keep it and renovate? Are you going to keep your house and buy another rental? Are you going to keep your house and rent that current house out, right? There's all these different things that may be on your mind. So, first of all, if you own a home right now and you're trying to figure out how much that house is worth, there's all these tools that you can use. We actually have one that we offer that's complimentary. It's called our HomeBot Homeowner Digest tool. If you're not already receiving those notifications monthly from us, just again, email me. We can set you up with that. But that's an algorithm, right? Just like if you go to Realtor, Zillow, or Trulia, or any of those sites, they're going to give you an algorithm. They're going to give you a computer approach, right? Telling you what your house is worth. The best thing to do is just check back in with your realtor. They want to hear from you. They want you to do a comparative or they're going to be willing to do for you a comparative market analysis. And that's really going to be specific to your house, specific to the neighborhood that you're in. How much is your house actually worth? And then to figure out what your proceeds might be. So if you actually wanted to sell that house, how much you'd walk away with, you can figure that like roughly 6% of whatever you sell it for is going to go toward selling the cost of selling the house. So you're going to have an attorney that works with you. You're going to have to pay transfer taxes. You're going to have to pay realtor commission. You may have to upgrade your smoke detectors, right? So you could figure like you're probably going to walk away with 94%. From that, you need to pay off any existing mortgages you have on the property, including, and a lot of times people forget about these, any second mortgages, other liens on the property. So like if you put solar on the house and there's a solar lien, if you upgraded and you did, mini splits or whatever, you may have other loans or you may have a home equity line. So that's going to help you figure out what your net proceeds will be. And remember, that money is your money. So you sell the house, you get those proceeds. You can then decide, does it make more sense to take all that money and put it toward a new purchase? Does it make sense to put some of it toward a new purchase and save the rest? Or do you have maybe other higher interest debt that would make more sense to pay off and make your household budget more comfortable? We'll talk about that more in a second. So on the very bottom, I've just got a simple example. You can kind of plug in your own numbers and figure out what you may end up with. And really great to keep in touch with your realtor and just ask for that CMA. That's something they're happy to do for you. So I just alluded to this a little bit, and I wanted to just point out because so many people I talk to, they're feeling stuck, right? They're like, well, my mortgage rate right now is 3%. And when I look at these now higher priced homes with higher mortgage rates, that just blows my budget out of the water. Well, here's what happened with one customer that I worked with recently. So they had bought probably about, I don't know, 5 or 6 years ago, a single family home in the greater Northampton area. And by the way, I should mention that I'm out here in Western Massachusetts. We may have some people that are watching from kind of anywhere in New England because we do lend all throughout New England and even some of the southern states too. So for those of you thinking about second homes, we can help you out. But this was here in Western Massachusetts. So about 6 years ago, they bought for $288 and they were able to sell now for $399. And they wanted to buy a new house that was bigger. Their family was growing. They needed more space. So when they first looked at the numbers, they said, well, wait a minute. My mortgage payment right now is only, $1,800 a month or whatever it was. How am I going to afford all my other household expenses and a new mortgage that's $4,000 a month? We just can't do it. So what we did is we looked at all the debt they had. They'd accumulated a lot of higher interest credit cards and some higher interest car loans. And what they did is they actually took their proceeds, which were about $150,000, and used a little more than half of that to pay off all of their other debt. So they moved forward with this new house, going from a household budget that used to be $4,700, that included their mortgage plus all their other higher interest debt payments. And they just wiped all those out and went forward with a household budget of about $4,100. So they saved about $600 a month, and they even saved about $14,000 extra from their proceeds just to have for an emergency fund. Now, disclaimer, we are not financial planners, okay? So this is an example that worked for somebody. It doesn't mean that it's going to work for everybody. And I also always advise that you involve anybody else who helps with your finances, like a financial planner, an accountant, whoever else helps you to figure out these puzzles, right? These strategies. But we can offer scenarios and then you can make an informed decision from there. So this is something, if you're really wanting to buy and sell, or sell and buy, that could work out. Now, if you're sitting in your house right now and you're like, we really love it. We love our house. We love our location. We really don't actually want to move. We don't want to go through selling and buying, but we just need to change it a little bit. Or maybe you do want to sell your house, but you need to do a little work to it before you sell. There are tools to do that. So just like you saw on that chart I showed in the beginning, where housing prices have been appreciating, values have been going up, you probably have a lot of equity, right? So equity is the difference in the value of the house compared to what you owe on your mortgage. So just like that person we just spoke about, where they bought at 288 and then they sold at almost 400, right? Their house appreciated substantially within those 5 years that they owned it. So if you wanted to keep your house and do some work on it, you could do so using a home equity line or doing a cash out refinance or using a construction or renovation. Now, all of these have different pros and cons, and a lot of the pros and cons are around how much equity you want to tap into, right? How much this is going to cost, how long you want to keep the house, and also what is the current value of the house? Do you have enough equity to get what you want to based on the current value? Or do we need to use the as completed projected value after the renovation is done to lend you that money? So again, contact me or anybody on my team if this is something you're interested in, and we actually would run through and work those numbers for you so that you can see whether or not that's something that might make sense. You can also use that equity from your current house to buy a new place, right? We were just talking about tapping into it to renovate, but if you own your current home or even other properties, you may already own multiple properties, you may be able to borrow off of that current house to then buy a new house. Usually that's done through what's called a home equity line of credit. People used to say, like, they'll say, do you have a bridge loan? There's not really bridge loans anymore, but home equity lines kind of act as that bridge from one house to another, right? Because you own house number one, you can borrow up to 80% of whatever that value is, and then you can use that home equity line to buy your new house. And then depending what you want to do, maybe you want to keep this old house and you want to rent it, or maybe you want to sell it right after you move. And then if you sell it, you would just pay off the mortgage and pay off the equity line. So it would be like a short-term bridge. So that's a possibility too. There's all these ways that you could use your home for different things, whether it's buying a new house, whether it's maybe some other debt consolidation, maybe it's renovations to stay there, or maybe it's renovations to get the house ready to ultimately sell in a couple of months. And again, I know I'm buzzing through this pretty quickly, but we have had quite a lot of different scenarios to cover in under 30 minutes. So again, if this pertains to you and you have specific questions, feel free to throw them in the Q&A, or even better, set up a mortgage consultation with myself or somebody on our team. And that way we can really dive into your specific budget and scenario and questions. So some people don't realize that you can do this, but your house that you own now that you're living in, you could potentially convert that into a rental property. Most mortgages allow you to do that. Even if you bought it as a primary residence, you can convert it into a rental. So if you are sitting in that house and thinking, well, this is a 3% rate, I don't want to get rid of this house, talk to your real estate agent again and just do a comparison and say, hey, what's the value of it right now if I were to sell it? And what do you think I could get on a monthly basis if I could rent it out? And again, then you can make an informed decision. Many loan programs, so if you want to then go and buy a new house to live in, many mortgage programs will let us count the projected rental income from the house that you're leaving to help you qualify, right? Because you may need that. You might not, if your payment now, is, I don't know, $2,500 a month, and your new payment's going to be $2,500 a month, right? You might not qualify to carry two mortgages at the same time. So renting out the original house lets us offset that mortgage. So that could be a good tool. Now there's underwriting requirements. You can't just say you're going to rent it. You have to actually get a lease agreement and all that. We'd walk through what you need to do before the closing of the new house. That could be a possibility. And then again, if you want to stay in your current house and you're thinking about buying a new second home or a new investment property, or a third or a fourth or a fifth or a sixth investment property, you can do that too. Real estate, like we said, continues to grow, continues to be a good investment. Rents continue to grow. So just some measures that are good to know. The biggest difference when you're buying a property that's not going to be your primary residence. So by second home, I don't mean it's house number 2. I mean, you're living in your own primary residence. You're going to stay there. A second home means a vacation home, and a rental property or an investment property means a house you're going to rent. Okay. So if you have your own primary residence already and you're thinking about buying a second home, generally you have to do at least 10% for the down payment. And on a rental property, you have to do at least 20% down or even 25% down for a new house. So that's the biggest difference. If you buy a primary residence, you have lower down payment options, even if it's your next primary residence, right? Even if it's your second or third one that you're moving into, that's okay. But when it's a vacation home or a rental property, you got to put more money down. And again, that's where tapping into potentially the equity from your current house could come into play if you don't have savings. And even if you do, you can compare that to, does it make sense to draw off of your retirement, or does it make sense to liquidate those stocks or not? That's where a good financial planner and accountant can help you strategize too. So other things just to be aware of, and we're actually about to wrap up here pretty soon. So other things to be aware of right now, we have what's called our safe harbor program. And if you bought anytime from like around December of 22 through the spring of this year, you're actually probably eligible for this, where assuming it's your primary residence, we would actually do a refinance for you without our lender costs again. So if you're sitting in a house right now that you bought fairly recently and the rate is higher and you're starting to see on the news that rates are coming down, just remember to get back in touch with us and we'd talk about refinance programs that would be available. We also have on the purchase side of things, if you are looking to buy another house, now this is also for a primary residence purchase, so not for a rental or second home, but we have a cash backed offer program. It makes your offer more competitive. So it's kind of like having an offer that's supercharged, because we're affiliated with Harbor One Bank, and essentially the program that we're working with, if you can't close, they certify that they'll step in and actually buy the house on your behalf. So it gives you a leg up on the competition when it's high demand, like it has been. There's also some programs available for debt consolidation. So again, if you're in your current house right now and wallets are feeling a little bit tight, there's a student loan debt consolidation program. There's other refinances that could potentially consolidate other debt. We talked about upon purchasing, you could use the equity, you could use the proceeds in your sale to consolidate debt, right? All of these things could be tools. Last thing I want to leave you with is just the importance of doing an annual mortgage review. So our team oftentimes will reach out a couple times a year just to check in, say hi. Any questions that you have, be sure to let us know. We're here for you after you own your home and want to be able to make sure that your house is comfortable for you. So a lot of topics we're reviewing with people right now would be if you bought and you have mortgage insurance, be sure to check your mortgage statement, see if you're paying mortgage insurance, because with all the appreciation with prices going up, home values going up, you're probably eligible to cancel that mortgage insurance early. So that'll help you right now in your current house. And also keep an eye on your real estate taxes and on your homeowner's insurance. That's a huge, huge question I'm getting from a lot of people right now is they're noticing that their escrow, so when they pay their mortgage, taxes, insurance are included, they're noticing that that's adjusting more so than it has before. And it's because a lot of towns and cities are reassessing properties. They're not only assessing the properties higher, but they're also increasing the tax rate. So you're kind of getting a double whammy, unfortunately. And then homeowners insurance too. The cost of homeowners insurance has increased pretty drastically over the last few years, both because of the insurance carriers needing to actually cover some disaster areas right throughout the country and kind of making up for those differences. And also because the cost to build houses, right? Materials and labor and everything with all of this inflation that we've had makes the replacement cost coverage higher for insurance carriers. So a lot of times people kind of like set it and forget it on their mortgage, but make sure you actually pull your mortgage statement, pull your tax bill, pull your insurance bill. We can set up a time to review that with you and just try to check in and see if there's any tips or tricks or anything that would help there too. So that really concludes all of the tips and tricks here when it comes to thinking about what to do with your current home, whether to sell and buy, keep it and buy, buy another house, investment property, whatever. And just some tricks to stay on top of when you own your home. Like I said in the beginning, please contact me if anyone has any questions now. That Q&A feature in the chat, you can pop it in there. I know a lot of this is kind of like personal information, so usually I don't get too many questions on the call, and people prefer to just set up a consultation after. We can go through all of your immediate information. So again, I'm Lindsay with Applied Mortgage. Anybody on my team is ready, willing, and able to help you with any of this type of strategy and assessment. We really, really look forward to working with you again in the future. And thanks for being on this call today.